Investment ISAs. My plan is to save up £1 million within an ISA by the time I retire. And in this video, I'm going to show you guys exactly how I'm doing it, and you can decide if you want to copy it, or if nothing else, it might inspire you on your investment journey. Hey guys, welcome back to the Transparent channel where I share my financial journey. Now this video is something I've wanted to make for a long time since I first started YouTube. Investment ISAs are something I absolutely love. It's taken me a long time to get there, but I finally understand them in a good way and I'm making good progress. Over the last 3 years, I've really knuckled down and my portfolio is really starting to grow. My ISA portfolio as of today is standing at about £97,000, but it's not been an easy journey to get there. There's been a lot of ups and downs and learning along the way. ISAs are actually not that hard to understand, but when you're first starting out, there's not really that much advice around. We don't learn this kind of thing in school, so we just don't know what ISAs are. And through the generations, a lot of people's parents didn't know about ISAs, so you didn't learn it from your parents, you didn't learn it in school. So where do you learn this kind of stuff? So my goal with this video is to hopefully give you guys the video that I wish I had when I first started. The truth is, a lot of people don't want to share their financial information, which is fair enough. People like their privacy. Lucky for you guys, I'm not that kind of person. I'm happy to share with you exactly what I've got, how I've got there, and how I've made it. And the truth is, which is really hard to swallow for me, if I would have had this video when I first started, my 97,000 would probably be sitting around 300,000 today, because I just didn't fully understand how it worked, what I should be doing, and where I should be going with it. My goal is to keep this really beginner friendly, so anyone new starting an investment ISA knows where to start, what to do and how to follow it. I'm going to dive in much more detail about what I've got in my account, my actual holdings, and what I'm buying on a regular basis, and share portfolio updates with you guys. So make sure you subscribe and stick around for that. If you could like this video, it'll help spread the word and we can get more people starting investment ISAs. I love investment ISAs because you can save so much money on tax and you can really grow your portfolio. So let's dive right in to what is an ISA. So on a very basic level, an ISA is an individual savings account which is given by the government. So it's kind of a tax-free way you can save money and not pay tax from anything you gain from them accounts. Now when most people think of an ISA, they think of a cash ISA, which is basically you put money in and the government or bank gives you a certain rate. And as I'm sure you're pretty much all aware, those interest rates are actually awful. But they are linked with other things around like interest rates and mortgages. So yes, it might be great to have a great cash ISA rate, but actually the price of your mortgage is probably a lot higher to make up for it. So it's all swings and roundabouts. There's also this thing called the lifetime ISA, which you've probably heard about, which has just come into play. And it's kind of replaced the Help to Buy ISA. The lifetime ISA is quite good if you're trying to save for a house deposit, but if you're looking for anything longer term, it's not worth having. I'll go over that in more detail in a later video because I want to keep this quite straightforward. Now what this video is about is an investment ISA, which is otherwise called a stocks and shares ISA, which is what most people don't know you can have. The majority of people think you can just open a share account, you buy your shares within that account and that's it. Well, you can actually have an ISA, which is where you can buy shares within the ISA, but any growth on those shares is all tax-free. So for example, my ISA so far, I've deposited £65,000, which is actually at £97,000. So I've made around £32,000 last year tax-free, which is just cash in my pocket. I keep all of my cash within my ISA, so if it grows again, I make more and more money. And that's how we start moving towards a £1 million goal. So at the moment, you can put £20,000 into the account each year. That can grow and you can gain interest on top of that, and that doesn't count towards your allowance. So for example, if you put 20,000 in this year and it went up to 30,000, you could add 20,000 the following year and then you'd have a £50,000 total. But the ISA limit has been much lower in the past, so you could put 4,000 in, 5,000 in, 7,000. I think it increased gradually over time, and hopefully it'll continue to increase in the future. Now I do realise for beginners, the amount I have in my account might be a double-edged sword. So it might be great showing you what I've got and you might think, oh, it's a great target, but you might also think that's so unattainable for me, I don't want it to put you guys off. So set your own financial goals and work towards your own targets. It could be £10,000, it could be £20,000, it could be £5,000. It doesn't matter. As long as you're saving it tax-free and making tax-free profits, that's all that matters to me. But that does lead me nicely onto my next point, is why am I so invested in an ISA? And the reason is because I'm self-employed. Woohoo! Be your own boss, eh? So if you're self-employed, you actually get very little support in terms of pension. I pay my national insurance, so I will get my government pension eventually when I retire, but who knows when that's going to be, because the age of retirement is always going up and it's longer and it's extended. And who knows what state we're going to be in when we get to that number. So for me, my options are really either save my own money and try and do it this way, or invest in a SIPP. And a SIPP, or a SIPP, is another way of investing. So you do get some kind of tax relief on a SIPP, but when you come to take that money out in the end, you are going to pay tax on that income. I much prefer to have my own money, so I feel like I've worked all my life, I've paid my taxes, and then when I do come to retire, I can kind of think, okay, all my money is my money, it's all tax-free, it's awesome. So the idea of the £1 million target actually is quite similar to this thing called the FIRE community. I actually didn't know what the FIRE community was. I started doing this kind of stuff way before I even knew what it was. So the FIRE community stands for Financial Independence Retire Early. So the idea is you work out a figure which is generally 25 times the amount of money that you need to live, and then you save to that goal, and then you can retire when you want to. And it's a really interesting way of looking at work in general. So the whole concept of work is that we work all of our lives, we get to a certain age, and then we can claim our pension. What if you were to take that concept and turn it on its head? So what if you had a specific figure that you saved towards, and you looked at your life in that way? So you thought, okay, when I hit that figure, then I can retire because I'm making enough money. So for example, for me, if I can hit £1 million in a pension, and I can get 5% a year, that's £50,000 tax-free for me to live on, which would be phenomenal. I'm not saying I'm going to get there, but it's a really great goal to have. I do believe I will get there, but when I get there will greatly depend on things like interest, how well my shares perform, and how much I'm able to save. I'm in quite a fortunate position that I do save $20,000 a year and add it to my portfolio, so it gives it a lot of room to grow. And the FIRE community, there's plenty of reading on about it. They are quite into saving money and being efficient with your money. I wouldn't say I'm obsessed with saving, but I am quite efficient and I don't waste money. I don't waste money on things like designer clothes or fancy cars. I just buy things as and when I need them. I'll buy the latest phone for cash, I won't buy it on a contract, and I'll save. I'll do more of my kind of saving tips and how I've managed to get to 20,000 a year in a later video, and I'll break down my earnings year by year. I plan to make videos to document my entire journey of how I've got to this sum, how I'm able to save this money, and kind of break it all down year by year. So that'll hopefully help you guys too. I'm also going to do a video on how I got a 100k house deposit by the time I was 26, so that might be quite an interesting one for you guys to watch. So the idea is overall, you want to invest money, have that money compound, gradually build up your wealth to a point where you can retire if you want to. You might want to keep working, but it's nice to have that extra money giving you money. So make your money earn you more money. So now what I'm going to do is I'm going to break down exactly what I've got on my exact strategy and how I'm planning to get there. I'm also going to share with you my bonus strategy, which is how I'm going to get more money from my regular shares to pay for my ISA balance. If you guys are also interested, I have created a Facebook group where we discuss investing strategies, or if you have a question, let me know in the comments down below and I'll do my best to answer it. Before we jump into my complete strategy, I want to say this isn't financial advice. This is just me showing my journey, and you guys can choose to copy it or not. It's completely up to you. It's completely transparent and up to date as I'm recording this video. This is what I've got and this is where I'm at. So let's take a look at where I'm at and what the plan is going forward. Hey guys, so right, let's dive into the numbers. Now I think this is a really interesting part to see. It's all good and well me talking about it, but let me show you my plan in numbers and action and how it's going to work. So as I mentioned, so far I've put £65,000 worth of my own money in. I think the first year I put 5,000 in because that's all I really had, and then I put 20. It's actually 4 years worth of tax allowances that I've amassed. So as I've been recording this video and I did my intro maybe 20 minutes ago, I've actually gained about £2,000. So my balance is now at £99,430, which is fantastic. So it really shows you the power of once you get money, how much them small movements in interest can make to your portfolio. So this is where it gets really interesting, and there's a link below down to an investment calculator that you can use to work out how much you're going to make and make your own plan. So my plan is to start with the initial balance of the 99,000, and I'm going to add 20,000 as soon as I'm able to at the beginning of every tax year. Obviously for some people that's going to be unattainable, but just save what you can. So as for working out the return rate, I've gone for 7.75%, which is the average return rate of the FTSE 100. If you don't know what the FTSE 100 is, that's basically the average of the top companies in the UK. So for anyone who's just starting out, the best advice I can give you on what to buy would be an ETF tracker. It tracks the top companies in the UK, and as everything recovers with the economy, it will pay you the gains based on those companies. It's a really stable, reliable way to do it. The other one in America is S&P 500, which is the top American companies. But at the moment, the state the UK's in, I think it's a really good investment. And I think in the next year, you should see way over 7% returns. Last year, I actually made about 30% returns on my investments. And I invested in a couple of big companies in the UK that I knew were going to recover. I'll go over those more in the next video. So let's take a look at the numbers. So I start off with my 99,000 and I add 20,000 per year. So at the end of year 1, I end up with 128,000, year 2, 160,000, 194,000 year 3, 230 in year 4, 270 in year 5. Now you can just see by that how much money, once you've got money and you start adding more money, how much it compounds. For example, I've been in it for 3 or 4 years so far and I've made nowhere near that. You know, in some of these I'm making more in 1 year than I have in the past 4 years. So then as we move on, you can see how much it starts to snowball and compound from there. So we're looking at 312, 358, 407, then 460. Now, when you get to the point of having 500,000 in the account, that's when it really starts to take off. And I can imagine when you've got 500,000 in the account, the amount it moves in a day must be so scary. You know, even 5% up or down is a crazy amount of money. It could move pretty much people's yearly salary in a day. So as we move on from there, we've got 579, 646, 718, 795, and it's really starting to get there. 878, that's literally like 80 grand in a year. And then we jump to 968. And then at the end of year 16, we end up with £1 million in cash in an ISA portfolio, tax-free. Now, how great is that? Now, I'm currently 31, which means by the time I'm 47/48, I'll be hitting that £1 million target. I know that's not some of the crazy numbers you might see people gaining in things like crypto and promising that you're going to be an overnight success with Tesla, but it's really stable and it's a really great way to go. So that's what I would recommend for anybody starting out. It's a really safe way to start building up your income. And if you want to go onto that website, you can enter your starting amount, put in the years, put in your return rate. If you want to use the basic of 7.75 like I have, you can. Set it to either annually or monthly, depending when you want to contribute to your ISA. And then you can kind of see how much you're going to end up with and make your own plan from there. Now, the bonus tip I want to talk about is my secondary goal to hit this figure. Now, although you can have an ISA and you can make money that way, you can also make money through your stocks and shares. So at the moment, you can currently make £12,000 tax-free on shares. So for example, if I had 100,000 in a spare account, in a regular shares account, and I made 10% interest, I can keep that 10 grand tax-free. Or if I made 12 grand, then I can have that tax-free. At the moment, you only pay tax over the 12 grand. That might change in years to come, and I think there are some plans possibly next year. We've got away with it this year, but possibly next year they might try and clamp down on that a little bit. So if you are lucky enough to be able to fill up your ISA and you can put some extra money into shares, then any profit you get from that, you can take as an income. Or you can decide to just keep reinvesting depending on what you need to do. What I think would be quite nice is the ability to generate money from my shares and use that to fill my ISA balance, which gives me more free cash flow to do things like enjoy life and spend a bit more money. I managed to do that at the moment. Down the line in the future, I might have more costs, I want to do more things, travel more, and it might be nice to have that freedom. I think eventually, if I could have that £1 million ISA and have 100,000 in shares, which I was getting more tax-free income, I should be looking on a conservative end to make about 55,000 a year. Or if we were to take the annual return rate of the FTSE 100, I could be looking at about 77,000 a year tax-free. So it just shows you how much you can make from an ISA and how important it is to start an ISA ASAP. If you haven't already started an ISA, I would highly recommend going to something like Trading 212. There's a link down below. That's quite a low cost option, or there is Freetrade. Freetrade is £3 a month, but that doesn't really matter. And if you want to sign up for one of those, you get a free share when you sign up with a link down below. Wouldn't worry too much about the fees around ISAs. I've seen a lot of discussion around that, but the real way to invest is to buy and hold long term. And actually, there is kind of a hidden caveat. Some of these ones that don't charge fees do actually make up for it when you buy a share. So the spread, the price you pay compared to somebody else might be way more. So you're thinking this is great because I'm not paying fees, but actually you can end up paying a lot more for the same share. And what I would like to reiterate is, of course, this is my portfolio and where I'm at. Don't be put off thinking these are big numbers and you can't hit them. 20,000 is a lot of money to save each year. As I mentioned, I am self-employed, so this is kind of my only route to having my pension. I could go for a private pension, but I'd much rather have control and do it all myself and have complete control of my finances. If I get to some stage in the future where I just want to take £1 million out and go crazy and buy a boat, not that I'd buy a boat, but I like having the ability to do that. And actually, if you do work for a company and a company is willing to match your pension, that is a much better route to go. So you should maximise your pension contributions to the place you work, and then if you have any spare money, take a look at starting an ISA. But I love ISAs, and I think ISAs are such a great tool to use. The deadlines for your ISA limit is March, so make sure you get the money in and use your allowance, or as much of it as you can afford to use. So now I've shown you guys my strategy, where I'm at, and how I'm trying to reach that £1 million goal. It'd be great if you guys have taken something from this. It doesn't have to be this huge goal of £1 million, although why not aim high? And hopefully this has answered some of the questions and give you an insight of how to build your ISA. I wish I would have had this when I was younger. Like I said, I would have been in such a better position now. But now I've got my plan in place, I'm on track, and I think I'm going to hit my goals. I'm going to document the whole process on this YouTube channel, so if you're interested in seeing that, make sure you subscribe, and I'll soon be doing a video on my portfolio where I break down my individual shares. No jumping on the hype and giving you these crazy companies that could go bust. I'm just going to give you solid information, and then you can make up your mind whether or not you do it. So thank you guys so much for watching, and I'll see you in the next video.